Hello guys, welcome back to my channel. Don't forget to like, comment, share, and subscribe. US stocks stumble on fear of global economic slowdown. US stocks stumbled in early trading with the Dow breaching below 3,000 on increased worry about a global economic slowdown. The Dow has fallen in recent days as investors worry about damage from the Fed's aggressive rate moves, approaching the level of its recent low. The S&P and Nasdaq are in a bear market, which means they have bought volume 20% or more from the recent hike. U.S. private sector activity fell in September, but contractions in both the manufacturing and service industries eased. S&P Global's monthly flash composite purchasing managers index rose to 49, a 3-month high. Meanwhile, with Sir Jerome Powell, who spoke publicly at a press conference on Wednesday, is again set to appear today, virtual even about transitioning to a new post-pandemic economy. Continues. Forecasts from companies such as FedEx corporations haven't helped sentiment. The logistic giant is raising prices an average of 9% as it experiences a global slowdown in shipping volume. Growth stocks are being particularly hard hit, with Apple, Inc., Microsoft corporations, and other lower in early trading. As a Wall Group shares fall 3% after the warehouse club said margins narrowed from last year with higher shipping and labor costs. Oil plunged was down 6% a barrel, while crude was down 8% to a barrel to on once. Dow futures can dollar versus gold, breaking $1,000 support. And there's no escaping the worth of the dollars. Gold traders are vending out one of the yellow metal's most secret support lines. The Herdaf is worst selling storm of the past 2 years, 1,000 announced Black Friday as the continue with its onslaught of 120-year hike after another. Bond yields tracking the 10 years US call it 12 years hike after the latest session peak above 8%. The yield reflects so-called real interest rates, or where the market thinks can lending rates set by the Federal Reserve will go. The Fed on Wednesday raised rates by 75 basis points for a third straight month in a row, bringing can lending rates to a peak of 3% or 8% below the bond yield level. To be sure, Fed Chairman Jerome Powell indicated there will be not let up for now in the central bank's hiking cycle as it battles to bring inflation ranging at above 8% a year to its long-standing targets of 2% per annum. Gold break below was a big deal, but it hasn't really been the catalyst for anything since, said Kurt Elam, analyst at online trading platform Alameda. The make break of the support a secondary confirmation of the initial breakout and a very bearish signal, he added. Gold benchmark futures contracts on New York's COMEX December settled down per ounce. The session lows was the spot price of bullion, which is more closely followed the futures by some traders, with spot gold trading at call gold towards next or even warned Sanil Kumar Dixit, chief technical strategist at skkarting.com. However, if the dollar index starts to decline from 113 and head towards 104 zone in gold can attract value buyers, which is held at Venus return of gold's previous rally is more convincing rallying point that could bring bulls back to recent hike. The futures down recession fear wake ahead of PMI data. The major equity average closed lower Thursday, with the blue chip Dow Jones Industrial Average dropping over 100 points. These three indicators are on course to close the week with losses of around 3%. Their fifth losing week ends after the U.S. Central Bank decided to hike interest rates substantially once more, while signaling that the benchmark rate will continue to push higher next year and remain at these elevated levels for longer than previously expected. Goldman Sachs cut its year-end target for the benchmark S&P 500 index to 3,600 from 4,300, suggesting for the fifth shift in the interest rate outlook will weigh on valuation for U.S. equities. The influential investment bank said the risks to its latest forecasts are still skewed to the downside because of the rising odds of a recession. Investors will focus on the latest U.S. business activity data for clues and how corporate America is coping with the soaring inflation and rising interest rates. Maybe that's all from me. Don't forget to like, comment, share, and subscribe. Thank you.